Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, remember nothing discussed today is financial advice. I'm not a financial advisor, and this is for educational purposes only. And now that's out of the way, let's jump into the Bitcoin chart, shall we? So we're going to do what we usually do. We'll run through this week's trade setups, and then after we've talked about theirs, so you guys can learn from it, then we will start to look at what we're looking for next. So, following on from last week's public YouTube video, we had a couple of plans laid out, effectively all revolved around this range, or if we broke higher, then we'll be looking back up to the 3940k region. But first and foremost, the first idea that we gave you was the simple swing failure pattern. Okay, very simple. Obviously, this is following on from last week's video. So one of the ideas that we laid out would be taking the overall highs, get everyone bullish again, because obviously we've had a significant pump to the upside. You know, everyone's in absolute bull mode throughout here. But once we started to break above this, there was no momentum to follow it through. Therefore, showing weakness. We can zoom into a lower time frame like the 15-minute here. Showing weakness. Came up, came down, came up. Couldn't continue, couldn't take out the initial high that it put in. And in the end, we dropped back down. Okay? And then we back tested on the Sunday the previous yearly high perfectly, and had another rejection. Okay, so if you caught that swing failure pattern, well done, give yourself a pat on the back. It wasn't an easy trade. You know, for anyone that's fairly new to trading, this is probably really scary to jump in front of as a swing failure pattern. But again, you didn't have to catch the absolute peak on top of this. You know, you could have seen it come up, seen it come back, seen the back test, and you had a very easy entry there, because that perfect back test not only lined up with the all-time high, but you also had a golden pocket there as well. Okay, so it was a fairly straightforward trade. So yeah, if you got that, well done. Hopefully you've taken some profits, because obviously we do have a range forming here. So that was from last week. Now this week has been quite fun, because we've had every single influencer and moon boy all posting the same comedy triangles, and it's just been a stereotypical pattern trading thing. So again, I talk about this a lot, and any of my OG followers will probably be bored of hearing this, but people seem to want to make patterns out of everything. Everything's a pattern in their eyes, and the reason why everything's a pattern is because they ain't got a clue how to trade. The pattern traders. And pattern traders, typically speaking, that's what you learn when you first start trading. First you use indicators, then you trade patterns, and then you finally realise that it's all crap, and you start to trade using proper forms of technical analysis, whether that's supply and demand style trading, or you're a confluence trader like myself. So it was quite easy. So obviously, seeing this breakout of the triangle, every single influencer and moon boy at the time is screaming breakout, told you so, exactly as predicted, all that good stuff. They're all going crazy. All their followers are then aping in, and we could see that in the order flow in real time. We could see a significant amount of new market longs opening up in this. And you can see here, this was Tuesday's plan. Again, this is no hindsight. This is Tuesday's plan from the 27th, 8:12 in the morning, my time. No change from yesterday, so the Monday's plan was still exactly the same. If we have a drive up, I'd be interested in the algo pocket around Sunday's highs. Okay, above that, the odds of creating new highs increases. So what am I looking for here? Well, I'm looking for Sunday's highs. Sunday's highs. So I'd be interested in the algo pocket around Sunday's highs. Now, this is the algo pocket. The algo pocket is between the 618 and the 786. Okay, this is the algo pocket for us. Okay, so what did we do? Well, we came smack bang perfectly into the algo pocket around Sunday's highs. Everyone's FOMO. That to me is a straight short trigger. And even if you zoom into lower time frames, you know, even if you didn't catch the absolute peak over the top, absolutely fine. You had a back test here, then you had another back test afterwards. So you had an initial back test here, which you could have got in on the golden pocket. You then had another back test after the first move down. This is the retest again. People that have been buying this because they'd have been buying the breakout and retest. And then, well, what did you do? Well, you had a nice bounce off that back into the golden pocket again, and then you continue to roll over. Okay, so this is what I mean. See what the masses are doing. I talk about this quite often. See what the masses are doing and figure out what's going to catch them off guard. Or what's going to catch them off guard in this case is they're all trading the breakout. They're all getting FOMO long. Okay, so therefore you're looking for a region on the chart. Bear in mind, I mean, look, I already knew about this region before I'd even posted this triangle for the guys. Look at the time difference. Okay, I was already waiting for a short in this region. And then it came down. Okay. So where did it come down to? Well, it came down to a fresh daily level that was down here. And if we do drop a little bit lower, I've still got this trade open. If we do drop a little bit lower, and I'll be looking for around about these lows here. Okay. And if it does drop further than that, then happy days, I'll let it continue running. Okay. So that's the comedy triangle from Tuesday. Nice setup there. So obviously if you got involved in that, you got a 5-hour trade out of that. Wednesday's setup, again, fairly straightforward. Nothing complex about this. We've got a range. If you can't see a sideways range in this, then you really need to get your eyes tested. Okay, we've got a sideways range. That's all it is. We've got sideways range. And the bulk of it is sticking within value. Okay? We've got high volume towards the bottom on the point of control now. We've got high volume towards the top. We've got a sideways range. We're just trading the sideways range. Okay? So therefore, I'm saying to the guys, Wednesday's plan, no major change from previous days. So again, outside of this zone, my areas of interest are still exactly the same. Intraday, we have a fresh daily at 30.2, which was this one here. Okay? And if that gives a reaction, if not, the daily at 29.8 for a potential swing failure pattern. Okay? Now, we came into, bear in mind this is Wednesday, started to drop. We got no reaction at all. In fact, actually, it's back here, sorry, initially. We came in to this daily, but we had no reaction. So I'm then updating the team saying there's no reaction from the first daily. So I'm looking for a market structure break to the upside, or I'll look for lower prices. Okay? We then started this slow grind back up. Now, I wasn't interested in this at all. Okay? Because the limited reaction here, I'm automatically looking for lower. Okay? And as I said, either this daily level below that, or I'm then looking at this zone here. Okay? Because this is kind of like the bull's last stand down here, in my opinion. Because again, this move was very thin. In the end, we came down. We got a very good reaction off this level. Again, lots of people selling down here into the lows because they haven't got a clue how to trade. They see a moving candle, and they just FOMO and try to follow along with it. And in the end, it's give us a nice trade. You know, currently sat on 4R. Okay? Where could this go up to? Well, realistically, because we seem to be having reaction after reaction off the golden pocket, okay, then we could potentially be looking for another golden pocket. Okay? They would come up into this cluster here. We've got a zone here, a sticky zone of high volume. Again, or they'll break out long from the comedy triangle. Okay, so if it does continue up, then I'll be looking within this zone. Okay, if it continues higher, happy days, great, I'll let it run. Okay, if it continues lower, great, happy days, I'll let this one run, and I'll let this one run. Okay, it's just simple, it's just level to level. Right, so hopefully you've learned something there. If you have, smash that like button. If you're not subscribed, make sure you subscribe to us so you don't miss any of these plans and this information that I share. Right, before we get into what I'm looking at next, first things first, today's video sponsor is once again BingX. Big thanks to them sponsoring today's video. If you don't know who BingX are, they are a crypto exchange where you can not only trade crypto, but you can also trade FX, commodities, indices, and again, all using crypto as collateral. So obviously if you want to deposit USDT, then you can then use that in turn then to trade, for example, the euro dollar or the euro pound or the S&P. So yeah, obviously if you guys want to check them out, links down in the description below. And if you do register, then you can get up to 5k worth of deposit bonuses, and you will also get a $50 free trade as well. So yeah, links down there. And just to point out, it's a no KYC exchange, because I know some of you guys don't like KYC, or you live in a country where you can't do KYC, which either way is fair enough. Cool. Right. Following on from that, let's look at what we're looking at next. So, quite simple. We are still range bound. In fact, where's the old range? There. We are still range bound. Okay. We've got the two ranges that we're looking at. In fact, let's just hide this one again and let's just do a straightforward one. Okay. The only ranges you need to be aware of right now are these. Okay. These are the only ranges you need to be aware of. Okay. What I refer to as the macro range the local range, and the next range or consolidation above us. Okay, so it's quite simple. If we continue to stay within this range and we cannot officially break the upside and then take these lows without another swing failure pattern, okay, then I'll be looking just to continue this range. And if we do continue this range, bear in mind this move, I've said this time and time again, this move is very thin. Very thin, so there's very little structural support. There is some structural support here, very little. Could be defended, absolutely fine. Roughly around the EQ, just above. Okay, if that doesn't hold, okay, if that doesn't give us your change in market structure in the first place, then we let it roll over. And if it rolls over, chances are it's going back down towards the range lows. Okay, from there, at the range lows, you'd be hoping that it holds, gives you the change in market structure, perhaps seeing all the sellers trying to sell the range lows because they ain't got a clue how to trade and they're going to clue how to spot an SR level. Okay, then run it back up and just continue trading this range until eventually one side gives way. If that doesn't hold, then unfortunately we're going to be looking lower and we're going to be looking to see if we get acceptance back into here again. Okay, if we get acceptance back into here, then at least you'd be looking to take those lows. Is it a deviation once again? And if it's not a deviation, then game on. We're back to trading the old macro range. Okay, there's SR levels in between here as well. But for the time being, that's what we're looking at. Okay, well, back to the upside. So once again, if we do continue up, then first and foremost, do we take out this high? Okay, another SFP. Again, it's just swing failure pattern after swing failure pattern after swing failure pattern at the moment. Fairly straightforward to trade as long as you understand how to use them. Okay, above this, watching these highs. I've talked about this a few times. We've got liquidity above these highs. Okay, so if we do trigger that and quickly reverse, then I'll be looking to get in on a sign of weakness. Market structure break, trapped longs up here, whatever it gives me, whatever the market gives me. What I'm not going to be doing is just placing a limit order up here for a limit sell and hoping for the best, because that's not trading. That's just wishful thinking. Okay, so if it doesn't give a reaction above those highs, then quite simply I'll be looking, do we get acceptance back into this old range? Okay, if we do, then I'll be looking to trade this range up to at least this region, this 39 to 40k region. Okay, if that then gives us a reaction, cool, great. Well, we're just then trading this range. Unless this range breaks, then we're in between and we're looking at this. Okay, all we're doing is doing sticky zone to sticky zone. So it makes no difference how you want to look at it. For me, this is all ranges. This is all ranges until you finally break that. Officially break it. And I don't mean break it and then drop back below it and drop. But until we get up here, this is just all range trading. And the reason why it's range trading is because we've got historical data. We've got historical SR levels within this. So every time we push up, you know, people are just wanting this God candle like this. But every time we push up, we're pushing into previous resistance where people are going to want to get involved, where range traders like myself are going to want to get involved. So therefore, it's sticky zones. Come up, trade a range. Push up, trade a range. Push up, trade a range. That's all you're going to do. Okay? So quite simple. It's just level to level. Okay? So they're realistically the three ranges that you need on your chart. Because they're the three most important ranges right now. Okay? So if one breaks, properly breaks, I wouldn't be trading a breakout. But see what happens when it gets to the next range. Okay? And so on and so on. Right. Hopefully you've learned something today. Obviously, if you guys want access to my plans, talking through in real time, talking about what I'm planning on doing, where I'm looking to trade, then go down into the description and click on our website, spitfiretraders.com. Okay? Once you're on here, you can have access to our free Discord by clicking here or clicking here. And if you want to take your trading to the next level and actually learn how to trade like us and get access to my trading plans, then come check out our members. Okay, within this, for $59.95 Great British Pounds, or $75 US, depending on your currency, then you get access to all our educational library, which is significant. And that's the reason why I don't have to give signals in my group, is because all the guys study the material and they understand how to create their own signals. And lo and behold, most of their trades line up with the same trades that I'm taking. Okay, but they've got my trading plans as confluence, okay, to give them a little bit of confidence in their own ideas. That's why they get my trading plans 6 days a week. Okay, So obviously, if you want access to that, then come check us out. Right. Hopefully you've enjoyed today's content. Again, if you have, please be sure to hit that like button. It really helps the channel out and shows that you want to keep seeing these videos. And until next time, gang, as you were, bye-bye.